Hello, friends. This is Manoj Guptani. I welcome you all on behalf of the Edupedia world. A very good and a very blissful namaste to each one of you. Good morning, guys. I guess you are having a wonderful day outside, and certainly you guys are enjoying it to the fullest. So, guys, this is the seventh video presentation relating to the topic of equity analysis and valuation. By now, we have already covered our entire segment for equity analysis. From this video presentation onwards, we'll be discussing and understanding the nuances of entering into and understanding the concepts relating to valuation. So, how does equity valuation is being considered, how the same is being understood, and how the same is being implemented while going for various type of business acquisitions and various type of valuation of the business relating to equity. So here in this particular segments, we'll be talking solely dedicating towards equity segments, wherein we'll be talking about stocks, securities, and related equity instruments. So guys, are you all set? Perfect, guys. Let's start our presentation. But before that, I'll have to remind you once again, are you guys honoring your word? If yes, then it's okay. If no, then scroll back to all my past presentations and definitely do make sure that you guys revise your topics time and again in recurring intervals. It's a CA final examination and you can't be so ignorant about the same. So you'll have to understand that it's a complicated kind of examination and it requires tough kind of preparations. So in order to achieve good marks during a CA final examination, regular revision is extremely important. Perfect, guys. With this, let's head start with our first topic of the day, and that will be valuation. Okay, guys, before starting out, let's understand what is valuation first. Let's understand the story first. Okay, with the help of stories, one easily gets to understand the concepts, right? Perfect. So, how many have you like traveled in a red bus? Red bus is one of the premier kind of internet service with which you can book your bus tickets without going for any kind of direct commutation or not. So Redbus is basically an app, right, guys? And we must have like traveled it once in our life at least. Okay, so let's understand the story behind what was Redbus and with which company is Redbus currently held with. So Redbus was basically started with one of a few freelancers. They started out their this app. They got an idea. Okay, what could be done if people are able to book their bus tickets right sitting at their home? So that will be very much convenient for them, right? So they don't have to visit the bus stops, bus stations, wherein they'll be like directly purchasing the tickets. So that can be easily done with the help of their app, just sitting at their respective places. Okay, so this was the idea behind this, but easy to say, but difficult to implement, right? So how that can be met? So in order to ensure that that can be successfully implemented and launched, they actually went for a venture capital. So venture capital basically means wherein you ask some of the venture capitalists who have enough amount of money in their hands to invest in your product or your services or your kind of schemes. So they went for some of the venture capitalists who had ample amount of money. They had idea, another person had money. So that is basically called for external borrowings. Okay. These venture capitalists invested their money in Redbus for about like 50 to 60 crores in setting up that entire business. And after a period of like 5 6 years, that business was sold to IBBO. IBBO is one of the premier kind of website which is dealing into tours and travels. I'm sure you guys must have heard about the same, right? So can you just like guess about the valuation at which IBBO did purchased Redbus? Any idea? Any guesses? Guys, it took like almost 50 to 60 crores to make Redbus being implemented in a well-mannered way. And the same was takeover by IBBO at a valuation of 800 crores. Can you beat that, guys? That was such a great kind of startup which was being introduced in the form of Redbus that the same was acquired from 50 to 60 crores to almost like more than 10 times of its initial value which was being invested into it. More than 10 times. So 800 crores was the price at which IBBO did purchase Redbus. So that's the kind of great scope and impact valuation do have while acquiring of any kind of businesses or any kind of things. Though I'll be narrating many other stories like this in order to make you understand during my concept evaluation for valuation of business and mergers and acquisitions. I'll be dealing with you regarding the same, but I'll have to make you understand regarding valuation first so that you can get a clarity as to why this concept is so much important, and not just for your examination point of view but also for real life practical scenarios wherein a business gets linked with, merged with, or like acquired by with. So these kind of things happen day in day out, right? So that's why valuation is an extremely important kind of stuff. But as far as this valuation relating to your equity segment is concerned, let's suppose we invest in any kind of security. Okay, so how can we value that security? Don't you think so? It would be very easy if I know the worth of that security. By worth, I mean the kind of cash flows that I'll be like able to generate from that security purchase. Okay, if I invest in ABC Limited company's share and I know that they'll be providing me the relevant kind of dividend each and every year. So that is like going to be the infinite times. And if like I'll be purchasing the same security for rupees like 50, and I'll be getting a dividend of like let's say 2 rupees or 3 rupees each year. Okay, so it would be very much easy for me to bring out this concept of valuation and get the value of that security for me, because I'll be able to know that how much money will I be able to generate while investing in that kind of security, right guys? So that's the exact kind of idea with valuation of either kind of security or any stock. Okay, so if I'll have to talk about what is basically a valuation. So, the value of any asset must be equal to the present value of all the future cash flows discounted at a rate that reflects its inherent risk. By inherent risk, I mean the kind of discounting rate that is called, you'll be taking off like KE for that matter. KE means the rate for discounting for equity. Okay, so that has already been discussed during board valuation as well. So it's equivalent to majorly prioritizing the present value of all the future cash flows that you'll be able to achieve. By discounting, we mean simply that okay, you'll be getting 2 rupees each year. Okay, right. But the value of that 2 rupee that you'll be earning after a period of 1 year won't be the same which you'll be earning today. Perfect. Because value of rupee is going to depreciate day in day out, as in by the terms the time value of money. Okay, the amount of money that you have 2 rupees in your hand today will fetch you 2 toffees, 2 eclairs, right? But after a period of 2 years you'll be having only 1 toffee in rupees 2. That was the same thing which is happening with us all over the years. The kind of chips that we used to have like maybe 5 years ago used to come at a price of like 5 rupees. Now the same is being uh, the same services can be availed for a price of rupees 10. So how that can be possible? That's simply because the time value of money is basically increasing the price of that product or security. So here also we'll have to consider the same principle wherein the value of any asset must be equal to the present value of future cash flows discounted at a rate which reflects the inherent risk, that is the kind of time value of money. Okay. And since neither the future cash flows nor the appropriate discount rate can be known with certainty, valuation is always an estimation. Several valuation methods are actually being used to value a business, but not a single method can be vouched to predict the exact price at which the entity can be sold. So its valuation is always an estimation. You won't be able to get an exact kind of idea, okay, that this particular security or this particular business can be sold for this many rupees or dollars or euros. No, you won't be able to do that. You'll have to go for an estimation, right? Correct. So valuation is always an estimation, and not a single method can be vouched for predicting the exact price at which entity can be sold. Valuation of business is a pivotal function while acquiring a company. That has been told to you guys. Read the story. Always remember that. Valuation is used for stock selection, concluding the market expectation, evaluating the corporate events, settling up any kind of opinion, evaluating business strategies as a communication amongst management, shareholders, analysts, appraisals, and so on. So valuation is such of so much importance, guys. Going for any kind of stock selection, going for any kind of business, going for any kind of corporate event, going for any kind of strategy. All you need to emphasize is getting the valuation on paper. By this, you'll be able to extract, okay, that you'll be able to extract good amount of returns all during the business takeover or not. So valuation is of such importance, guys. Okay, so now so much talked about, we guys had understood about the valuation, its principles, and various type of examples, right? So let's understand now what is the valuation process. I'm sure you'll be like eager to know how valuation is being done. So this is basically the list with which the kind of broad steps with which we go for a valuation process. Understanding the business, forecasting the company's performance, selecting the appropriate valuation model, converting the forecasts into valuation, and finally communicating the information, that is by preparation of the research report. So while going for any kind of business, okay, first of all, we'll have to understand the business. That is the same thing which I told you guys while going for any kind of stock selection as well. First of all, and the first and the foremost imperative step is to go for understanding that business. Okay, so you are going to invest like a lakh rupees or a crore rupees or 10 crore or 100 crore. No matter what's the deal, first of all, understand that business because you'll be able to know that how the business is going on. This particularly includes like evaluating the industry prospects, competitive positions of the company in the industrial environment, corporate strategies of that business, its planning, its execution, overall economic environment wherein the company operates, the technological edge which that particular business is having over its competitors and other industries. So therein you'll be able to understand this business so well in such a manner therein you'll be able to first of all take a decision whether to go for that business or not. So that's the first and the foremost imperative step. Understand the nuances of that business. First of all, valuation comes later on. Understanding the business comes first and the foremost thing. There might be chances that after a certain period of time you'll think that okay, I shouldn't invest in this business after understanding the nuances of it. So valuation won't ever take place, right guys? Ever. That won't be done. So first of all, understand that business. That's the first and the foremost step for any kind of valuation process. Next comes forecasting the company's performance. So how you'll have to forecast, okay, this company is performing so well in the past. It has been like growing day in, day out. Okay. And certainly while I'll be like investing and valuing this company or acquiring that company, after a certain period of time, this company is going to provide me so returns. Okay. So what are you doing in such manner? You are just forecasting the company's previous performance. You are actually basically understanding the previous performance and forecasting the company's performance that will be done in future. Okay, perfect. So this basically can be achieved by doing economic forecasting and studying the company's financial information. Two approaches are basically used for going out for any kind of economic forecasting. That is top to down forecasting and bottom up. So guys, now you'll have to understand what is basically first the top to down and what is this bottom up. So in order to understand any kind of business, you'll have to like start out with one of these two approaches. So in top to down forecasting, analysts basically use their macroeconomic forecasts to develop the industry forecast, and then they make individual company and asset forecasts consistent with the industry forecast. So that's how they do. They start out with macroeconomic factors, that is like taking into economy. Remember we did had understood the concept of economic analysis, industry analysis, and then finally company analysis. So that's the same thing which is being done in top to down forecasting. They'll first consider the economic analysis, then they'll move to industry analysis. Okay, and then finally they'll go with a particular kind of company. With the help of this, they'll understand whether it's imperative and it's good to invest in valuation of that business or not. So this is basically top to down. In bottom up, reverse will be done. So in bottom up, forecasting analysts basically aggregate and finally, they basically aggregate their individual company forecasts first with the help of industry forecast, and then finally aggregating it with a macroeconomic forecast. So herein, first company analysis is being done, then moving into the industry analysis where the company is working, the kind of segment, and then finally the economic analysis of the complete nation, or I say the complete economy of that country. So while evaluating financial information of a company, the analyst can consider both the qualitative and quantitative factors. This basically involves a careful scrutiny of interpretation of the financial statements and other financial and key disclosures which are being made. So that's how you are able to forecast any company's performance. Next comes into the picture as selection of the appropriate valuation model. So that's the third most imperative step. So while selecting valuation model, an analyst can use different kind of perspectives. One of the widely used methods is determining its intrinsic value. Remember guys, that was the fundamental analysis. The role and the key for any kind of fundamental analysis is to go for the analysis of the intrinsic value of a security. By intrinsic value, I mean the true worth of that security. Okay. So that is the widely one of the most widely used methods in determining the intrinsic value, which is fully dependent on the quality of the information and inherent assumptions. Well, there are some other value measures. We know that a company has one value if dissolved today, another if it continues for its operation. So, like one of the most popular notions of value finding is the going concern assumption, which says that the company will maintain its business activities into the foreseeable future. Two broad types of going concern valuation models are absolute valuation model and relative valuation model. So that's how basically these things are being done. In any kind of absolute valuation model, it is basically a model that specifies an asset's intrinsic value. This model specifies a value of the company at a particular point of time and is compared with the existing market prices for decision making. The present value or discounted cash flow approach is basically the most popular type of absolute model approach. So, if you have to understand the nuances of it, you'll get it that the present value and the discounted cash flow approach is the most popular type of absolute model approach. The present value models based on dividends are called dividend discount models, and those based on free cash flows concept are called as free cash flow to equity or free cash flows to firm models. Where a company is being valued on the basis of the market value of assets and its resources, it controls, we call it the asset based valuation approach. So that was one. That was the first form of uh, going concern approach by the help of absolute valuation model. Remember? So the second one is basically to go for relative valuation model. So wherein a asset's value relative to that of another asset, and the basic notion of relative valuation model is that similar assets should sell at similar prices. So, remember, guys, we usually denote this with price multiples, wherein popular relative price multiples are price to earnings, P ratio, price to book value, P divided by BV, and price to sales ratio. So these are the different kind of price multiples. The approach of basically relative valuation model is applied to equity valuation, and the same is known as method of comparables. The primary decision that has to be taken for on selection of the valuation model is based on basically three broad criterias. Okay, three broad criterias is basically being done for the primary decision on going for a particular kind of valuation model. First, the valuation model should be consistent with the characteristics of the company being valued. So that's the first and the foremost step while valuation. Okay. Second one is being done taken care as The valuation model should be appropriate given the availability and the quality of the data. That's the second most important step. And the third one is the valuation model should be consistent with the purpose of valuation, including the analyst's own observative and own perspectives. So, first of all, that should be consistent with the characteristic of the company being valued. Second one, the valuation model should be appropriate given the availability and the quality of data. You have so much data. With the help of that, you'll be able to go for a single kind of valuation model. So why to think about the other one, right? You'll have to accept that first one. Simple. So the valuation model should be appropriate given the availability and the quality of data. And the third one is that it should be consistent with the purpose of valuation. You have to know for what purpose you are doing this valuation. Are you like going to acquire that business, or are you like simply going to invest in that business? So both things are actually going for different valuation models. So you'll have to first gauge on the purpose of valuation. That should be including the analyst's own perspective as well. So analyst may have some of the objectives concerning with evaluation. So he has to take care of it. So with the help of this, you'll be able to select the most appropriate valuation model. Perfect guys, that was the third most imperative step in the valuation process. And finally, the fourth one, that is converting the forecast into valuation. So what have all you been done, you have completed in the first three steps, you'll have to take care of the same in the fourth one. Analysts basically play a pivotal role for collecting, organizing, analyzing, communicating, and monitoring the corporate information which they have actually used in the valuation analysis. And these particular things help the clients achieve their investment objectives and contribute to the efficient functioning of the capital markets. So that is being done in the fourth segment, wherein you convert all your forecasts into final valuation. Okay. And finally, that will help you in getting the final fifth step, and that will be communicating the information via preparation of your research report. So in your research report, you'll be exemplifying, or you'll be providing or making the other persons understand the entire valuation process. So that will help the entire stakeholders, whether it's government, whether it's creditors, whether it's equity shareholders, whether it's other stakeholders. So all those stakeholders will be like benefited with the help of this valuation report. And guys, this is how basically the entire valuation process is being done. I'm sure you guys did understood the nuances of what is valuation and how valuation is process being taken care of. So with this, I'm sure that you'll be revising these topics time and again, and certainly you'll be doing your work on time. So perfect guys, I'll be concluding my video with a dose of motivation, and that will be you need to overcome the tug of people against you as you reach for high goals. George S. Patton was the person who mentioned this quote. So guys, in any sphere of your life, whether you are doing CA, whether you are actually going for any kind of relationship, or you are going for any kind of business, okay, you'll be like meeting so many people across. Some will be good, some will be like okay, average kind of stuff, and some will be bad people, and some will be like extremely bad people. So, what's a piece of advice that can be provided to you wherein you can be like easily going for your fuller and fullest kind of potential? That will be stick to those people who are like motivating you, who are like inspiring you day in, day out, and leave aside all those people who are discouraging you, who are actually not good to you, the ones who are extremely bad. So you need to overcome all those people who are extremely bad, who discourage you. And certainly you'll have to set them aside from your life because they are stopping you from achieving your dreams. These are the persons who are actually stopping you or like prohibiting you from achieving your aspirations, your dreams all the way. So you need to overcome those tug of people who are against you as you move forward towards reaching your higher goals. So always remember, guys, a good company is an extremely imperative, first and foremost step in order to achieve good things. So it is being told that one who has already achieved something in his life, revolve around those kind of people because you will be able to understand as to how they were able to do it rather than going for those persons who have never ever tried the same. So always surround yourself with the intellectual and the good kind of company wherein you'll be able to extract your 100% potential, and you'll be able to know, okay, you are having so much strengths in you and you don't have ever thought about the same, right? So therein you'll be able to inculcate those kind of passion, compassionate things in you, and certainly that will help you in growing your standards, growing your life, and lead a better living. I'll be concluding with this with a thank you on behalf of the Edupedia world. Keep interacting, guys, via questions, comments in the YouTube boxes. Stay connected, and that will help us in understanding your needs way better. We are like providing you the presentations with our utmost, with your utmost kind of satisfaction. So do let us know about your satisfaction level as to whether you are getting satisfied with the results or not, and certainly the kind of stories that I'm telling you time and again in order to make you understand the concept. So that will help us in motivating our potentials as well. So certainly that will help us in understanding your needs. Perfect, guys. With this, I'll be taking your leave. Love you all. Take care. Bye.